Welcome to the next lecture. As I told you in previous lecture, there are two types of analysis, qualitative analysis and quantitative analysis. In this lecture, we will dig into qualitative factors and we will understand why quality is more important than price. After completing this theoretical part, when we will move to practical part, I will show you in detail how qualitative analysis works and how the mistake of not doing qualitative analysis can make you pay a very high losses in stock markets. I will show you real life examples of listed companies. So, why qualitative factors are most important thing in stock market investing? Which is a very big question. A lot of people ask me, what do you mean by quality and how to do it on your own? After completing this lecture, you will get a brief introduction of qualitative analysis. To make it simple, I have created a short story so you can understand very well. Suppose you are sitting at home and enjoying a cup of coffee, and suddenly somebody knocked on your door. And when you open the door, you see one of your old friends came to meet you. While having conversation, he gave you an offer to make money. He said, I am starting a new business which required 10 lakh rupee of capital. I don't have that much of capital, so I am looking to raise funds for my business. Why don't you give me half of the capital and become a partner in my business? Now I want you to pause the video and think for a minute. What would you do if you were in this situation? Well, if you want to help your friend in running his business, then you can give him the money. But this is not the case. Your friend is giving you an investment opportunity. Your hard-earned savings are going to somebody's hand. Then you are required to do some due diligence before investing your savings. Obviously, the first thing you would ask your friend, what is your business? Believe me, this is the most important question to ask. Most people lose money in stock markets because they don't ask this question whenever they buy a stock. What actually they are buying is a stock ticker. It is showing the stock price and they think they are investing, but actually they are speculating. I want you to understand this very well because you are not buying a stock ticker. You are becoming a partner in a business. So it's your responsibility to know about the business, and believe me, it's not that very difficult. Most people think this is the most difficult thing in the planet. This can be done only by some high intellectual persons or some MBAs from Harvards. But actually, this is not true. Any ordinary person can do this extraordinary work. It only requires passion and hunger to learn. And we are here to make things simple and easy for you. Don't worry about it. So, as I explained you, at first you would ask for his business model. Business model is the base of any kind of due diligence because when you itself don't know where actually your money is going, then how can you call it an investment? And obviously it is a speculation. So that's why this is our first step of qualitative analysis, understanding business models. Now suppose your friend said he wants to start a hotel business. Now your job as an investor is to figure out what is the size of hotel industry in that area where he wants to start his business. What kind of possibilities are there in that particular location? What kind of services are beneficial? And the most important thing to look for, are there people going to hotels? Whether they are going for luxury hotels or some normal hotels. Most of the people who are living there are rich, middle class or poor. This is something you need to figure out. These are the things we should look for. That's how we came to a second step of qualitative analysis. Size of industry or product and services. Now, when you are assured that industry size is huge, the very next thing you should look for is the size of the company. Now, one thing you should understand here, the smaller the size of the company, the bigger the opportunity. Because smaller companies have low market shares. They have the room to increase the market share. That's why opportunity is huge. And the bigger the size of the company, the lower the market share, and that's why opportunity would be very low. So this is our third step of qualitative analysis. The next thing you should ask to your friend is the competitive ability of the business or the competitive advantage. Believe me, this is the most important thing because thousands of businesses are running every day, but only 1% of them survive. Yes, only 1% of them survive. Rest of them failed because of the lack of the competitive advantage. They don't have any unique business model. That's why they fail. A business cannot gain market share without having any competitive ability. It's like a unique business model than your peers. So that's why this is our fourth step of qualitative analysis. When we move to our separate lectures of all these steps, then you will start understanding what actually I'm trying to say. After we see that this business has a good competitive ability, the next point you should look for is the growth. How fast the company could grow. Growth is really a mystical thing. As an investor, you should have an estimate of how fast the company can grow. When I say growth, growth means earnings in growth, growth in profitability, and growth in margins. And obviously, as well as growth in stock price. But as the rule of stock market investing, as long as the earnings growth is there, stock price will move up. So don't worry about it. We will understand later how growth affects the stock price, how high growth could boom the stock price. We have a separate lecture about it. This was our fifth step of qualitative analysis. Last and most important question you should ask whenever you get this kind of investment opportunity is, what is the quality of the management? Management are the people who are running the business. Now, in our story, your friend is the person who is running the business. First of all, let me tell you why evaluating the quality of management is so important in investing in business. So, management is like a driver of a car. Even if you are driving some fastest car in the world, but the driver is not skillful or experienced, then you cannot reach your destination safely. It's very risky. If the people who are running the business are not capable, then there is difficulty in survival of that business. With quality management, I mean to say is the management should be honest, because you cannot do business with a dishonest person. You cannot make a good deal with a bad person. So as an investor, should know that your friend is whether a honest person or not, whether he had done any kind of scam or not in his past. Second thing, he should have that passion for his business, because as Mr. Buffett said, without passion, you don't have energy, and without energy, you have nothing. Third thing you should look for is the experience. Management should be experienced enough to tackle the difficult phases of business. Every business go through bad phases. It is the responsibility of the management to tackle these situations. We will take more to the quality of management later. This was the last step of qualitative analysis, evaluating the management. So this was just the introduction of the qualitative analysis. If you feel like you did not get something, don't worry about it. We have a separate lecture on every step of this qualitative analysis. We will make you understand in details with practical real life examples. So don't worry about it. Thanks for